One integral feature of our options wheel strategy tool is the Breakevens Calculator. Anytime we're assigned a stock, it's essential to know the break-even point of that stock so we can make informed decisions on where to set our call option strike price. In this video, we'll take a close look at this fantastic tool and show how it can quickly and easily aid our decision making on trades. So let's take a look. Okay, so in this video, I'm going to give you a detailed explanation of the Breakevens Calculator. Now, if you haven't already seen our video on the portfolio screen, I'd strongly recommend you watch that first, as we'll be going back and forth between the Breakevens Calculator and the portfolio screen. So there'll be some sections of the portfolio screen that might not make much sense if you haven't seen that video first. You'll find a link to that video in the description below. You can download the Options Wheel Strategy tool from our website at wheeloptiontraders.com, and again the link's in the description. Go there for all things related to wheel options trading, including access to our amazing video training course dedicated to the wheel strategy. There's over 50 videos and counting. Right, to start, it's worth noting the question button at the top of the break-even screen, and clicking this opens up help shapes with lots of useful information on how to use this screen. And click again to toggle off. Okay, so here we go. This is the Breakevens Calculator screen. You can access it on the fourth tab here. As you can see, I've already got some tables open here. Each table is for one particular stock that we currently own. So you can see this one is for OSTK and this one is for FCX and so on. Now, when you first open your wheel strategy tool, you'll see that the break-even screen is blank as shown now. You'll never need to manually add any tables to this screen as it's all automated. So when a stock is assigned to you, the tool knows this and automatically creates a break-even table for you. And I'll show you now how that works. Okay, so let's start with a story. Imagine you've done your research on stocks to trade the wheel strategy on, and you've sold put options on 4 different stocks, as shown in the portfolio screen here. We've got APPS, FCX, Yeti, and Visa. As you can see below, the total options value for these trades is $778, meaning if all 4 trades reach expiration before being closed, we'll receive a premium payout of $778, which is very nice. Now, if all these trades expire out of the money, the shares of the underlying stock will stay with the options buyer, and we can start selling puts again. However, if all 4 expire in the money, we will have to purchase them from the options buyer. And you can see the total cost for that would be $30,300. We would then be proud owners of 700 shares in 4 different companies. Now, I won't go into the thought process of whether we want this to happen or not in this video. However, if you're new to options trading or even a seasoned options trader, our videos on this topic are insightful and well worth watching. The link to our video training course on the wheel strategy is in the description below. Okay, fast forward 4 weeks and we've reached the expiration date of these 4 trades. As you can see, as the options have expired, they have a market price of 0, and we've made the $778 premium profit we mentioned earlier. However, only 2 of these trades have expired out of the money. Right, let's complete the closed trade details. Apps suffered a bad month. Earnings didn't hit expectations and the underlying stock price fell below our strike of $12 to $11.23. We're therefore getting assigned 300 shares of that stock. Remember, each option contract is equal to 100 shares of the underlying stock, so the 3 contracts means we will have to buy 300 shares. And we are paying $3,600 for the privilege. Okay, so let's fill that in. Close date is 26/11/22. Trade is EXP, expired, assigned. And as the trade went as far as the expiration date, the closing premium is 0. Okay, so you can see the final P&L is $291 when the trade is closed, indicated by the grey background. When this happens, there are all sorts of things going on in the background. The trade P&L details are getting automatically added to the trade history screen. The stock is being added to the assigned stock calculator. The dashboard is being updated, and of interest in this video, a new table is being added to our breakevens calculator. Okay, you can see that a new table has been created for apps. Let's take a look. We can see that we own 300 shares in apps and we bought those shares for $12, resulting in a total cost of purchase of $3,600. So far, so good. Now, below that, we can see the put we sold. It shows as EXP, meaning it has expired, and the amount we received is $291 in premium profit, which can be deducted from the cost of purchasing the stock to calculate the break-even point. So we can easily see that if we want to sell those shares right now on the open market, we'd need to sell the shares for a price of $11.03 each to break even, or sell above the $11.03 each to make a profit on the whole trade. Okay, more on this break-evens table later. Back to the portfolio. FCX had a good 4 weeks and its underlying share price closed at $34.13 at expiration, above our strike of 26. So we didn't get assigned those shares. So let's fill in the details. 26, 11, 22, EXP, meaning simply expired and not assigned, and 0 premium. Nice, closed at a profit of $144. Quick look at the break-even screen, and you can see it hasn't added FCX to the screen as its underlying shares haven't been assigned to us. Similar story for Yeti. Good few weeks and finished above our strike. So here it's the same date, 16, 11, 22, EXP, and 0. Again, it hasn't been added to our break-even screen. Both these two trades are now closed and finished. If we want, we can sell new puts against them when the market opens, or we can think about trading other stocks. And finally, Visa didn't do so well. A poor credit card usage forecast in one of the major financial newspapers has caused a slide in stock prices for all companies in that industry. The stock price has fallen to $181.24 by expiration, and we have therefore been assigned 100 shares in Visa. So to the form, 26, 11, 22, EXP assigned, 0 premium, total premium profit of 127. Okay, onto the break-evens calculator screen, and you can see the table for Visa has been created. We've paid $18,500 for the 100 shares and deducted $127 for the put profit, giving us a break-even stock price of $183.73. Basically $1.27 per share lower than we paid for the stock. Okay, so as far as our story is concerned, we are now shareholders in apps and Visa. As wheel strategy traders, though, we are not long-term investors in these companies, not even close. Our aim is to sell the shares as soon as possible, but to do so by selling call options and at some point getting the shares called away from us to the option buyers of our call option contracts. And along the way, we make some more money from premiums of our call contracts. When we eventually sell the shares, our aim is to do so at minimum break-even point, or even better, for a profit. Now, I've simplified this stage of the wheel strategy somewhat. For a detailed explanation on selling call options as part of the wheel strategy, check out our wheel strategy training videos, link in the description below. We have step-by-step instruction videos on how to trade call options on assigned stocks with clear and concise explanations. It's essential viewing for new traders and has lots of tips for more advanced traders. Okay, so the next thing to do is wait for market open and sell calls against these two stocks. Let's assume we want to sell them as soon as possible. So we want to choose strike prices at or just above the break-even points. Okay, the market is now open. We fire up our broker's portal where we can now see our new stock sitting there and sell the following call options. Apps, strike 12, 9, 12, 22, 0.86 and 3 shares. Visa, strike 185, 9, 12, 22, 1.36 and 1 share. Okay, let's add these to our portfolio. Click the red Add Call button, type APPS and hit Enter. It's showing today's date, expiration 9/12/22, strike 12, premium 0.86 and 3 options. Okay, now we can see that we can make a potential premium profit of $258. Good, on to the next one. Again, click the red Add Call button, type V and click Enter. Expiration 9/12/22, strike 185, premium 1.36 and 1 option. Okay, now we can see that we can make a potential premium on this trade of $136. Okay, so we wait 2 weeks until contract expiration and let's see what's happened. And well, Visa's done well. It seems the financial newspaper article was fake news after all, and the stock price has recovered to $203.57, above our strike price. So this is great. Our stock is sold at $200 and we've made a tidy profit on the premium of $136. Right, let's close the trade out on our portfolio. Okay, close date 10/12/22. EXP exercised for expired and the stock exercised away. Closing premium 0. Okay, it's now closed and grayed out. Over to the break-evens calculator. Okay, we don't need this Visa table anymore, so let's remove it. Click Close Table and OK, and it's gone. Nice. We can now either start selling puts against Visa again or look elsewhere for a different company. Now on to apps. Not quite the same story. The share price hasn't recovered and it's dropped to $13. Okay, let's see what that means. Onto the portfolio. Close date 10/12/22. EXP. The option contract has simply expired, but we still own the underlying shares. Premium 0. Okay, a nice premium profit of $258 and the trade is closed. Okay, on to the break-evens calculator. We can now add this trade to the calculator and calculate our new break-even point. So, date the trade was closed, 10/12/22, and we select Call EXP as this was a call option and it's expired, and the premium we received was $258. Okay, right, now we can see our break-even point has fallen to $10.17. That's still only $1.83 above the current stock price for apps. Right, we'll keep selling calls until we finally get exercised on January 29th. By now, our break-even has reached $6.96 from our original call strike of $12. Meaning our 300 shares in apps are sold to the options buyer at $12 per share. And we've made a nice profit of $378. Nice. So as you could hopefully see, this feature of the wheel strategy tool is essential. Knowing the current break-even point helps us decide where to set our strike price so we can manage our positions with the utmost efficiency and ease. And if anything's unclear or you have some questions about the break-evens calculator, please comment below and I'll do my best to answer as quickly as possible.